Lissette from JVS Insurance here today. And I'm really excited because we're going to be talking to Richard Rey, who is our health insurance advisor for us here in JVS Insurance. And he's helping people determine the best health insurance coverage by providing options and his expertise while helping people navigate and understand the complexities of health insurance. So I have a lot of questions. I get a lot of questions from our clients. I know that I direct them over to you, but there's lots to talk about, so I want to jump right in. Thank you for joining us, Richard.
Oh, it's great. Thanks for having me.
Of course. Thank you. So, question number one, what's the biggest difference between property and casualty and personal health insurance and its claims,
Yeah. So, that's one of the points of confusion for people because they're always concerned that if they pick the wrong plan, that they'll get non-renewed or that they'll cancel the policy, et cetera, et cetera. And that's the biggest difference is that I get with property and casualty with your homeowners, you can get non-renewed, et cetera. With health insurance, that's not the case. Especially if you have an ACA plan or a plan that's been underwritten at the time that you apply. Once you get approved, the plans are guaranteed renewable until age 65. Now, there are short-term plans and plans that don't underwrite at the time of application and they underwrite at the time of a claim, and those can non-renew you. But traditional health insurance that underwrites at the beginning or an ACA plan is something that you keep forever. So you don't have to worry about, I got cancer, and now that I have cancer and that my claims are going to start, the insurance company is going to drop me. The only way that would happen, and that it's an absolutely remote chance, is if the company actually shuts down that product across the board for all of their insureds. But that is highly unlikely and doesn't happen. Most insurance policies are something that once you purchase and it's in place, it's available to you until you turn 65 years old.
And you could cancel a plan.
Yes, you can cancel the plan at any time. Their contract with you, they can't cancel you, but you can cancel them at any point.
I see. And
with the exception, I'm sorry, Lissette, with the exception of if you have an employer plan, typically when you sign up on the insurance through your employer, they have an open enrollment period. And when you sign up, you are locked in until the next open enrollment period, unless you have what's called qualifying life events, like a baby is born, somebody dies, or you get a divorce, or you get married, things of that nature.
All right. So we're going to touch on employer plans and family plans a little bit, but I wanted to also ask you, does dental and vision also fall into these guaranteed renewables, or how do you? Yeah.
Typically, most insurance plans fall under guaranteed renewable plans. Again, there are a few plans out there that are, I would call, non-traditional health insurance plans. They are meant to be a short-term solution, and they are typically called short-term plans. So the advantage is that if the insurance company will pay all the claims at the time, but at the time of renewal, they won't renew you. But that is not a traditional major medical plan. That's usually short-term plans.
And what things do we use normally to determine what plans we should purchase and go with?
That's a good question. And this is why you have to have a health insurance advisor that covers all the bases for you, because there's two primary choices. Number one is going to be your income. There are plans that are income-based, and then there are plans that are health-based. And depending on your situation, when I sit down with a client, we get into the nitty-gritty of how much they make and how their health is, what medications that they take, because what I have found is that no two families are alike, and you have to find the right plan. So if you have an income-based plan, something that's on the ACA, for example, A common problem that I have is that I talk to somebody and they say, oh, my sister has so-and-so insurance and she pays $100 a month. Why are you telling me that the same plan is going to cost $500 a month? And it's because it is income-based. You have the same age, you have the same health qualifications. The difference is that you make more money than your sister, and hence her plan is almost free. And there are plans that are free on the ACA, and then there are, but you end up making more money, and you end up having to pay more for health insurance.
So you and I know what ACA is, right? Because throwing out ACA, but for those, the street name, the nickname is that Obamacare, right? Right. So it's funny because there is no such thing as Obamacare. There is no Obamacare. The actual term is ACA, right? The Affordable Care Act. And I know what you're talking about, and I'm guilty of throwing around the slang as well. Right. But just to clarify, there is no such thing as Obamacare or Biden care or Trump care. There's none of that. It's the Affordable Care Act, and that's all there is. And speaking of which, November 1st, we're actually recording right now on November 15th, and open enrollment just started.
We're right in the middle of it, and it will go through December 15th. Right. This is a really critical part because part of the benefits of an Affordable Care Act plan is that regardless of your health, you can get health insurance. So at this period of time is the time where you have the most options available to you. If you call me on December 16th, the choices that you still have choices, and they're still good choices, but you have less choices. I always like to put 2 or 3 choices in front of a client so that they can see what they're comparing to and make sure that they're making the best decision.
So this is your busy season.
This is our busy season. Yeah.
Another question for you, Richard. What are the big misconceptions of our ACA plans? Who qualifies? What are the benefits? I know you touched a little bit, but
right. So the big thing that I get from people is that they don't qualify for ACA, and frankly, anybody can qualify regardless of their health for an ACA plan. The ACA plan that you may not qualify for, the part that you may not qualify for, is the subsidy, and the subsidy is what affects the premium. So there, going back to, if you make $100,000 a year, you will pay full price for the insurance policy, depending on your age. And if you make $30,000 a year, $40,000 a year, you will probably be subsidized by the government. The main things that take into account is how much money you make. And it's not just money, how much money you make. It's how much money is in your household.
Right.
So if you say to me, oh, I'm a housewife and I don't make any money, my insurance should be free. But your husband makes $200,000 a year and you have no children, your insurance is not going to be free because it's the household income. And in some instances, they might even take into account, you have a teenager that's working and their income can be counted into your house as well. So all of those things affect the income, or rather the price of the insurance. So that's the first thing. And then the other thing is, I don't qualify for a subsidy. I make too much money, and then I ask them how much they make, and they tell me their age, and then they qualify for $200 or $300 a month because they equate the ACA with welfare, and it is not welfare. The standards are not the same. So you and then the thing is if you go onto the website, if you don't want to apply, you don't have to, and you can just go on there and apply for the insurance and not check to see if you qualify for a subsidy and pay full price for the insurance. But you have to take the step to get qualified, and then they will apply the subsidy once you're qualified. But if you don't take that step, they'll charge you full price for the if you're talking about most insurance plans cost $400 or $500 a month for an individual through the ACA. A couple $100 a month could be the difference between you being able to afford the plan and not being able to afford the plan. And this is especially important if you have health conditions, because if you have health conditions like diabetes, or maybe you've had chronic illnesses that could take you out of the running for some non-ACA plans, then your choices are really the ACA plans. And one of the downsides is that since everybody qualifies for an ACA plan regardless of their health, the insurance tends to be a little bit more expensive. So
Right.
you need all the help you can get to get that premium down.
Of course. I want to shift gears a little bit here because I wanted to talk a little bit about the employer plans. When does that play and when does that fit in? When should someone actually get an employer plan?
So employer plans are tricky. By and large, when I'm talking to an individual, my very first question to them, as much as I love to sell everybody insurance, my very first question is, does your employer offer health insurance?
Right.
And if the answer is yes, and the employer pays for part of the health insurance, that is the number one place for you to get your health insurance, okay? Because they are subsidizing your insurance. And if you go on to the ACA and see, oh, wow, I got a huge subsidy for paying my health insurance, but my employer offers health insurance, I lose that subsidy.
I see. Right.
Okay, so it's very important. So typically, if your employer offers health insurance and they pay for part of it, that's the number one place for you to go. Not necessarily for your wife and for your children, right? Because the employer subsidizes the employee's health insurance. They do not subsidize the families. So with the family, we do have options. We can look at the ACA and they don't lose the subsidies. The only person that would lose the subsidy is the employee that is actually employed by the person that's offering the health insurance.
Same with family plans.
Yeah. So the family plans on the employer sides are very expensive because they are ACA compliant, which means they have to take everyone regardless of their health, which means the rate is high. Okay. And so they're usually very good, very robust, but they tend to be very expensive. And if you have a spouse and a couple of children, depending on how they put it together, it can be a lot of money. So people say, oh, I talk to a lot of people say, oh, I'm on my spouse's plan at work. And I already know that they're paying top dollar for their insurance, and they don't have to be. There are other options that can save them a lot of money.
Well, this is why our clients reach out to you and why you're definitely a trusted health insurance advisor here at JVS Insurance. We don't know what we would do without you and your expertise. So we definitely appreciate and thank you for joining me, Richard. We hope that this conversation is helpful for people that you know or someone that needs health insurance, even if it's time to even renew and do it. Even if you do have health insurance under an employer or not, Richard and here at JVS, we want to make sure you have the best coverage at all times. And of course, stay tuned for future episodes where we'll talk to more of our team members in different departments like home, auto, commercial, life and health, and financial planning about everything insurance in the Sunshine State. So make sure you subscribe to our YouTube channel. And if you're not, follow us on social media and then visit our website at jvsinsurance.com for our newsletter and more info about us. So thank you so much again, and thanks for watching.
Bye, Lissette.
Bye.